You're listening to the Accenture Insurance Influencers Podcast.
I really use the analogy with, the other industries. You kind of want to create something that flies off the shelf. And that means having not only a deep understanding of what the customer, whether, as I said, it's an enterprise or an individual wants to buy, but also being able to capture insights and be reactive.
Hi, I'm Igrani Hu, and this is the Accenture Insurance Influencers Podcast. My guest today is Ruth Foxe Blader, a managing director at Anthemis on the investment team. Earlier this year, Ruth posted on Medium about the need for insurtechs to buckle down in 2019. This is what she said.
The past couple of years have shown many talented teams proving product market fit for fintech propositions. 2019 must be the year of scaling up, scaling across borders, and getting the unit economics right. To do this, founding teams need time and focus. They need to be properly funded already in order to buckle down and figure out which problems are worth solving.
I was hoping to unpack that with you because I think there's a lot of pieces to that. And first of all, I guess maybe the scaling part. Anthemis generally invests in early stage startups. And from what I see, that scale is a really hard thing to achieve. So can you talk a little bit about scale, going from that scrappy bootstrapped company? How do you overcome that? And how do you get to the point of scale? And when you do get to scale, what are the keys to success?
Yeah. So I think Anthemis has been lucky and prescient and invested in a number of, category creating companies like Betterment and the Climate Corporation, companies that really have successfully scaled and in some cases exited. So I would say that we look obviously for the same thing that all VCs look for in terms of founder excellence and, a real unmet need in the market that someone has an interesting approach to. I think, at that point, the quality of the product is really also key. So creating something that people want to buy, and in financial services, it's tough, but I really use the analogy with, with other industries, you kind of want to create something that flies off the shelf. And that means having not only a deep understanding of what the customer, whether, as I said, it's an enterprise or an individual wants to buy, but also being able to capture insights and be reactive. In financial services, in order to launch, most companies need quite a lot in terms of insights from industry or capital. That could be risk cap in the insurance context. It could be a lending instrument. And in order to get those things in place, the founders usually have to do quite a bit of thinking. We will invest even before those things are in place. And it's really fun to watch founders think about how they're going to communicate their value proposition to whomever it is they need to convince to back the company. And then, how they're going to use whatever capacity they derive from their interactions with the financial services industry to create great products. Sometimes it's not apparent. Oftentimes, the product that we think that we're going to market with is slightly or demonstrably different from what ends up selling. So we really look to work with people who have a high level of creativity, who understand the value that they can create and understand the value that they can capture, and are willing to shape the proposition in a way that that they can begin to do some of that.
Another piece of your comment on scale, you said scaling up, but you also said scaling across borders. And I'm wondering if you can talk about that a little bit more, because obviously insurance is a global industry.
Sure. I think it depends on the business. I can give an example from my current portfolio. There's a company called Hokodo. We're looking at providing support to SMEs first through a single invoice credit risk insurance. And what's really clear is that anything in the trade finance space is really quite international, quite early. Anthemis as a whole invests in about 50% US companies, US-based companies, 50% European companies to date. And so we see, the challenge of finding a geographical focus, which is large enough to build a very large business. And I think the pan-European fintech is really just now getting started within, I would say the past couple of years. It's quite difficult because of the regulatory regime and also the cultural challenges to launch a company in multiple markets. I think that this is really key and really critical to this phase of fintechs becoming much larger businesses. And I wonder if what we'll see is some of these companies scaling much the way insurance companies have traditionally scaled, which is through acquisitions. I'm anticipating that happening a lot more in the next year or two.
Mm-hmm. I wanted to dig into another piece of that quote, which is that the fintechs need to be properly funded already. And I understand this is in the context of the scaling argument, but I'm wondering what your thoughts are on new insurtechs coming into the market. We've seen this huge explosion of insurtechs over the past 3 to 5 years. Is there a problem that hasn't been solved yet? And is there room for a new insurtech?
So I always say insurance touches everything, and it really does. It touches all parts of our life, and it is the prerequisite for a modern economy. So when I talk about insurtech, I define that incredibly broadly. It's really anything to do with risk and risk mitigation. So the answer is yes, absolutely. There's a lot of risk which needs to be mitigated, and there are a lot of products which frankly are not good and could be replaced, and processes both inside of insurance and inside of insurance companies which could be improved through the use of technology. So I'm very bullish that there are a lot of really important problems left to solve. In terms of the traditional P&C insurance startups, I bet there are still, companies that we'll see coming out and will improve on the mistakes of some which have shut down. And I think that it is about being circumspect about how much capital is really needed to build the business. And it will be special founders who are really smart and probably have proven exits elsewhere, who can attract investors who are willing to take the punt. I think that investors are pretty smart too, and they recognize that these are very expensive problems to solve. And what I've noticed is that typically the insurtech companies, which are, raising multiple rounds, the more traditional, companies that are selling insurance digitally and, perhaps better products and with more digitally native back-end processes. Those companies, tend to be represented by founding teams who can attract capital a little bit more readily.
Great. I wanted to move on to another theme that you mentioned as far as Anthemis and bit of its mandate or working style. And one is that this idea that fintech is embedded. There's the general adage that insurtech is, 5 to 7 years behind fintech. And so based on your experience in fintech and what you're doing in insurtech currently, where do you see this embedded insurance idea moving within the industry? And what does that mean for both incumbents and the insurtechs themselves?
Yeah, I think it's really scary for incumbents. And I know this from spending 7 years at Allianz. I think that there is a sense that it would be really interesting to provide customers with insurance products in a context relevant way. And the thing that came up at Allianz, because everyone just liked to go to Austria and ski, was like, oh, what if when you hit the slopes, then you get a message and you can just opt in and have skiing insurance. It's I don't have I'm not looking for that startup, but believe it or not. But I do think, what the trend that we're seeing both at the infrastructure layer and also at the customer acquisition layer is that people are increasingly expecting finance to become invisible, and they're expecting to have financial transactions that make sense and are context relevant, which perhaps they don't even need to choose to action. And that really becomes embedded, and it becomes embedded in people's normal lives. I think that the other thing that we're thinking about is with emerging risks, helping people to, quickly, deeply understand those risks and protect against those without a ton of thought. Historically, what the insurance industry has said is that insurance is a product which is sold, not bought. This would really turn on its head that old adage. And I think it is quite threatening for incumbents from the perspective of, who owns the customer, and are we just, product producers? And the same questions that, as you said, the banks were asking a decade ago, really about becoming the dumb pipes.
Mm-hmm. In reading some of your other interviews, I understand that you have a bit of a thesis on data versus math in insurance. I'm wondering if you can talk about that data versus math in insurance and why that's important.
Yeah, I think this comes from, it was Jeff Jonas, like a blog post in 2005 or something, where he was writing about how data beats math. And when I started working in insurance, I was like, oh, cool. Now I totally get to like roll up my sleeves and hang out with data scientists and do tons of stuff with data. And I was literally horrified by some of the things that I saw, because it is a data industry. Insurance is a data industry. And the amount that we actually use our data and actually capture it in a way that it can be used or even understood is just pretty insane. And so I started to develop this idea that insurance hasn't reached its data beats math moment. And, so we have law of large numbers and the ability to kind of win using statistical math, which is very sophisticated and works. But in terms of both external data and internal data, internal to companies and internal to the industry, I think that there's really massive improvements that we can make on understanding risk and understanding customers.
Mm-hmm. And I also see kind of this trend from sort of the historical look at data. We have a historical data set. We can apply our models and we can look backwards and understand our risk, but not necessarily I can take this maybe new forms of data and predict risk. Can you comment at all on that sort of like using data to look backwards and using data to look forwards?
Yeah, I think historical data is the basis for insurance, and it serves us pretty well. And there are a lot of really interesting data models that are developed to, deeply understand historical data and also to create sort of stochastic paradigms. So it's not just pure history. At the same time, predictive modeling in some ways has been around for a while, and in some ways is in its infancy. And there's a lot of debate about how accurate it is. I think we have to use it. There's a lot of, we'd been doing a lot of research in my team about synthetic data and the options that it presents for really differently understanding risk and understanding situations. I think even just having very basic data about assets, insured assets, can really change the way that people approach insurance. I was recently at our hacking finance retreat. Anthemis hosts a hacking finance retreat annually in the French Alps. And we had a really great discussion about what happens when, we have a lot more data and we more deeply understand risk. Does the entire insurance paradigm change? Insurance is really about pooling risk and sort of getting a big enough pool so that the probability of something catastrophic happening is low, and then everybody pays out of the pool. What happens when the pools are comprised of just the very best risks, because we actually understand who the best risks are in different contexts. Does that sort of break the whole paradigm of solidarity, and where do we go from there? I think we're a long way from being there, and I think that we're at the cusp of really taking a lot of the ambient data that's out there about, I'm thinking, properties, people, I think, is a whole other topic, because there are a lot of privacy issues there. But really understanding on a much more fundamental level what the risk looks like, and either helping the owners to shore up against, potential risks. And there are a lot of new risks when you think about property and climate change, or just, building books that are more sensible. And if you ask people who have exposure to those risks, despite the fact that it is a new paradigm, and it, the kind of model for assessing stuff with new data hasn't been built inside of insurance companies yet, they are nonetheless very, very excited about it.
Mm-hmm. And I like that that breakdown a lot. And I'm curious, because traditionally insurance is P&C, and to another extent life, but it's tangibles. And this came up in season 1 of this podcast, where a large portion of what the insurance industry covers is tangible goods, but that increasingly there's a lot tied up in intangibles, so intellectual property, cyber, etc. I'm wondering if you have any comments on that, and how that might, how that's changing with technology.
Yeah, I think it's really scary. And when I talk to sort of people older than I am, they're super scared of this stuff. I think that it's really a generational sensitivity. A lot of the privacy issues, we're going to see a lot of just social change around those attitudes. But in terms of cyber, the cyber risk factor is everywhere. And I think we're starting to see maybe it's our perception in 2019. Maybe it is reality, but we're starting to feel like risk is just all encompassing. And, cyber, I think, is a good example of that. And it's a good example, again, of how in that case, really combating those risks does need to have a sort of embedded feature. One of the early investments that I made in Allianz Ventures was a company called Argus Cybersecurity, and it basically it was a cyber technology preventing cars from being hacked. And there are you think about the electrical grid or cars or identity theft, like all these things are really emerging risks, and insurance companies are far away from understanding the impact of those.
Mm-hmm. Another thing that you had mentioned was that Anthemis so far has really split its investments across the US and Europe. There are some really interesting things happening also in Asia and in China in particular, as well as in South America. I'm wondering, to what extent are you looking at that, and maybe does that change your perspective or inform your perspective of what you're looking for in a startup?
So yes, we are looking at at both of those areas, and in fact intend to do a lot more work in Latin America. And we have a big part of our thesis, where we are very closely following China, because we see that that there's just a lot for us to learn from the Chinese internet. So whether or not we're investing in those geographies, and we do invest in geographies other than the US and Europe, we do that opportunistically for now. And I think that will, watch this space. But yeah, we definitely feel that it's incredibly important to be abreast of the way that people are interacting with technology in other places.
Mm-hmm. So with a lens toward the fact that you're dealing primarily in the insurtech space, what do you think incumbents can be doing today to prepare themselves for this digital future that, as you've mentioned, Anthemis envisions this embedded, data-driven future? What can incumbents be doing to ensure that they are part of that future?
I suppose the companies that I'm working with that really seem to be taking advantage of this wave of technology that's focused on our industry Number one, they're grateful that there is a whole sort of, generation of technologists who are focused on the industry. It's such a boon. They're paying attention to it, and they are looking for consistent ways to institutionalize interactions with startups into their organizations. I think that there are a couple things concretely that you can do. One is to know your strengths and to sort of say, I want to know everything about that's going on that impacts these lines of business. The other thing you can do is to say, you know what, a safe place to try new stuff would be this because we don't have any channel conflict, or, we're not cannibalizing ourselves. I don't think either of those is wrong. I think that whatever people are doing to put serious resources behind understanding change and innovation is really important. I think, really legacy tech and kind of legacy ideas and thinking are the enemy of innovation. And so the extent to which you can either create a space where people can use new technologies just full stop is really important. And also having people around, and I think this is happening more and more, who are open-minded and who understand technology and who aren't scared of it. Those are, I think, big culture shifts that folks running financial institutions can be putting in place. And, attracting new people who don't look the same as everybody else and who are willing to challenge the status quo, I think is really interesting, experiment. But I think really putting resources behind innovation is a no-brainer for the insurance industry.
Mm-hmm. Fantastic. Is there anything that we haven't talked about that we should?
Well, I just want to invite anyone with awesome ideas about insurtech to get in touch and follow me on Twitter and, get in touch, direct message me, whatever.
Okay. Very cool. Thank you so much for taking the time to speak with me today, Ruth. It's been a really interesting conversation.
Thank you so much.
That wraps up my conversation with Ruth Foxe Blader from Anthemis. Join me in 2 weeks as Kara Buhonig, chairman and co-founder of InsurTech Connect, comes back. We'll be talking about how incumbents, insurtechs, and tech giants can work together to foster a more resilient, agile insurance industry. I'm Igrani Yu. Thanks for listening.
You've been listening to the Accenture Insurance Influencers podcast. To hear more great episodes, visit accenture.com/insuраnceinfluencers.